As South Africa awaits Finance Minister Enoch Godongwana's 2025 budget speech today, businesses are bracing for signals on economic growth, investment and policy support. With the speech expected to set the tone for the country's economic direction, small and medium-sized businesses are hoping for a boost in confidence and investor appetite. My colleague Nomonde Xulu spoke to economic experts Sanisha Packirisamy, Chief Economist at Momentum, and Maarten Ackerman, Chief Economist at Citadel. Let's connect to that conversation.
The options that you've outlined there, the best option to take is to grow the economic pie, and to do that would be embarking on further structural reform efforts. And I think that what we've seen in terms of the progress being made on structural reform from Operation Vulindlela has been very promising. We've seen, more energy security coming through. We've seen some legislative changes on the logistics side that can allow for private sector participation. We are seeing some movement even on the water side. And of course, with the State of the Nation address, we saw some triumphs being made also in the visa regime process in order to get, more visas that are, done with the backlog, and we're starting to see a little bit more of an improvement there. And I think that these factors will enable a much higher level of economic growth further out. However, that's the nature of structural reform efforts. It tends to help your growth rates a bit further out. And so for the interim period, what will help South Africa is political stability and policy certainty.
Coming to you, Maarten, on the issue of the rising debt level, how sustainable do you think South Africa's rising debt to GDP ratio is? And what are the risks if borrowing continues at this rate?
Yeah, I think it's a major challenge for South Africa. The Minister of Finance, Enoch Godongwana, a couple of years ago said that, it's spiral. And that is really when your interest payment as a percentage of your total budget starts to run away. So we're already north of 20%. So of every rand that we collect, 20 cents plus go in terms of servicing that interest. So the more we borrow, the more interest we need to pay, and that's taking money away from very other important things that we need to spend on. So just to put this into perspective, about 15 years ago, our debt to GDP was around about 27%. We're now touching 75%. Now, there's a big argument to say that compared to other emerging markets and, developed markets like the US and Japan, that's still quite low. But we need to remember, for developed markets like the US, where they sit with the reference currency in the world, the dollar, that's a very different story. We're sitting with the rand, and we need to service that debt mostly in rand. So, I think it is definitely not sustainable. I agree that, the silver bullet is to get economic growth, but we're not going to get that in the next year or two, even three. And that's why we need to get the balance between not running away the debt levels until we get economic growth to help us to actually lift the tax base and the revenue that we can get from just pure tax revenue.
I want to dig into the issue around taxes, but before we do that, coming back to you, Sanisha, one issue that is obviously a burning issue is that of the SOE support in South Africa. How will continued support for state-owned enterprises like Eskom impact fiscal stability? And do you think that there are viable alternatives to reduce their financial burden on the budget?
Unfortunately, in South Africa, in order to harness a higher level of economic growth, we do need to see more participation coming through from the private sector. Now, that said, the private sector needs to be enabled by functioning and working state-owned entities. And in the case of, Eskom, Transnet, and a number of other SOEs, we've seen a number of governance as well as operational failures. So I think to some extent, there will be some reliance on government going forward in order to get their house in order. And that will then allow for a more concrete environment for businesses to start operating in. Now, what we've seen with the likes of Eskom there was some accounting treatments being done there that then suggested that, we had items that were actually below the line and in some cases didn't actually add to the debt to GDP numbers. Now, of course, if South Africa goes the route of a fiscal anchor and we have some external body that monitors this, we will then have to look at how we actually classify any particular bailouts and guarantees to the state-owned entities. With regards to Transnet, the backlog is quite significant. So, even though we saw rail volumes actually improving a little bit over the course of the first 6 months of the last financial year, what we did see was a loss being made, and that's because of the security issues and the backlog on the infrastructure. And this is where government can play a role, but with private sector also being on board. So I think it's, to say that, yes, there will be some participation coming through from government in order to alleviate the financial constraints of these state-owned entities, but it will have to be done hand in hand with the private sector. And I think over the last couple of years, there's been far more acknowledgement on the part of government saying that we do need, the financial assistance as well as the expertise from the private sector in order to get the state-owned entities into a more functioning state.
Sanisha, you touched there on infrastructure and the need for investment into infrastructure. And of course, this is one of the focus areas highlighted in the SONA by President Cyril Ramaphosa around infrastructure development. In your assessment, what infrastructure projects will be prioritized and how will they be funded?
Now, in South Africa's case, our fixed investment to GDP ratio is currently sitting, just below 15% of GDP. And if you had to compare us to the typical upper middle income country, which is where the World Bank classifies us, that actually needed to be closer to, let's say, 35% of GDP. If you had to include lower income countries into that metric and look at the global average, it's still sitting higher than South Africa's at around 24 to 26% of GDP. So that makes, a very firm statement suggesting that fixed investment in South Africa needs to ramp up and needs to ramp up quite substantially. The 940 billion that's been earmarked by government over the next 3 years are likely to be plugged into the network industries. And again, touching on Operation Vulindlela's successes, they focused on the network industries in particular from all the problems facing South Africa, because they do believe we can achieve our biggest bang for our buck by rectifying the issues within these network industries in order to accelerate growth from here.
Coming back to you, Maarten, on the tax issue. Now, the SARS Commissioner recently said that South Africa is at an inflection point in terms of tax increases where tax increases or any more tax increases are likely to negatively impact economic growth. Now, what do you think is the likelihood of tax increases or even new taxes in this budget speech?
I think, the reality is that if you look at the budget over the last 5 years and the lack of economic growth, that was the main impact on tax side of the economy. So it's not really about the tax rate, but it is the fact that the economy or the economic pie is not growing sufficiently to actually support that. So if we can get the economy growing, just with the current tax law in place, the current rates, we'll actually get the revenue that we need. So I fully agree that the economy is at max tax, if you like. So even if they increase taxes, they're probably not going to get the inflow into the fiscus as expected. And the reason for that is people, companies, individuals, all of them will probably start thinking about structuring differently, not avoiding tax, but they might even think about changing their tax jurisdiction. And the Treasury is well aware of that in terms of we at that upper end in terms of what we can squeeze out of the economy. And also, further tax increases with an economy, a consumer that's under severe pressure is actually going to be a massive hurdle and actually keep us from getting to capacity growth. Then the other thing that we need to keep in mind is they had ample opportunity over the last couple of years to actually increase tax because, this issue of revenue has been with us, like I've said, for the last 5 years already. They haven't done that. Last year, you could probably argue it's been an election year, so it's not a popular thing to do. But if we need to balance the budget, let's say for the next couple of years, while all these structural reforms come through and we do get high economic growth, there might be the need to actually start thinking about some tax increases, and we can unpack where that's most likely. But if you think about something like VAT, that is the one that they'll know exactly what we'll get from the next day. It is broad-based, it's across the economy. They can also think about the whole VAT system where they include more zero tax items for your lower income consumers, typically where they spend. And there's no reason why they can have a higher VAT rate for, let's say, higher consumer discretionary goods. And if you think about our VAT rate at the moment, we're still well below the average in Africa. So there is a good case to be made to say, well, if we need to try and prevent the debt to GDP running away, is a possibility or an option to actually think about something like tweaking the VAT tax in terms of getting more revenue into the fiscus.
Before we wrap up the conversation, Sanisha, do you have any points to add in terms of your views on any potential changes to tax policy?
There's nothing I can disagree with my colleague that's just mentioned, that, from the taxes that are available, the value-added tax relative to a global comparative does suggest that there is some room to increase that. Unlikely that we will see any significant changes on the corporate income tax. I think they're actually trying to move that in the opposite direction in order to enhance business activity and economic growth. I think it's quite difficult in South Africa to implement some sort of luxury or wealth goods tax. I mean, first of all, it's not going to really get you as much back into the fiscus, but also logistically and administratively, it has proven to be exceptionally difficult in other markets as well. If we look at the types of taxes, that generally come through, maybe a little bit of bracket creep that could give you somewhere between 10 and 12 billion, perhaps something on the fuel levies and sin taxes. In terms of the value-added tax, again, it would have to be coupled, as Maarten has mentioned, with some offsets, such as, raising the number of zero-rated goods. We do believe that, the value-added tax is, one item in their arsenal that Treasury could potentially use in the future when we are quite, strapped for revenues. For this upcoming budget, we're not looking for, a massive amount of fiscal slippage if we look at the seasonally adjusted run rate of the taxes. And as therefore, we do think that, using something like a VAT increase could come potentially further down the line. So it's more, an issue of timing. We know that there are huge social demands on the fiscus, including things like, the longer-term viability of the national health insurance, trying to expand the social relief of distress grant. And most of these items will need to be backed up by a more permanent revenue stream in order to keep fiscal consolidation measures in place. And as a result of that, we do think something like a value-added tax could be beneficial in that regard further down the line.
We are out of time, but I quickly just want to get your views on an issue that's probably a new consideration in this budget cycle, that of global uncertainty and the Trump risk. How could potential cuts in U.S. funding and foreign investment impact South Africa's economic stability and fiscal planning, and what strategies do you think the country should be thinking about to mitigate the risks of strained interrelations? And let's start with you, Maarten, very quickly. What is your view there?
Yeah, I think, this is a wake-up call to fast-track the implementation of structural reforms, because the quicker we can get to more sustainable growth, that will help a lot. The best example was at the last monetary policy, the Reserve Bank did a couple of scenarios. And one of the scenarios there was, if we can get economic growth to 3%, that will actually create a buffer so that we can weather a lot of this global uncertainty and storm that's approaching, whether that's specifically on SA or just, globally, there's a trade war going on. So all our trading partners are impacted by that. So again, like we said earlier on, the silver bullet in all of this is growth. If we can have much higher growth, if we're more competitive, more productive, that will help us to weather the storm, even if we do get some of the funding taken away from the US side.
And Sanisha, your closing thoughts on the issues around global uncertainty and strained international relations?
Well, we think we could get an announcement on the budget in order to offset that rough 20% of the PEPFAR funding that came through for AIDS counseling in South Africa. We could see an announcement being made in that regard in the budget. In terms of, the foreign affairs and international relations, this is becoming a huge theme in economics. And I think, going forward, South Africa does have a number of opportunities to make its mark on the global political stage. We've got the European Union South African Summit coming up in March. We've got the America First review, where we'll hear a little bit more about the tariffs that are going to be implemented on the 1st of April. We've got the BRICS Summit coming up in July in Brazil this year. And then, of course, the AGOA recommendations that will be set forward in September. And then not to mention South Africa hosting, the G20 and being the president of that. So I think there are a number of opportunities for South Africa, to start getting a little bit more engaged on the global political stage. And I think at this juncture, where we are in the global economic cycle, it is imperative that South Africa continues to build trade relations across the globe. And it is a key point for us to be able to diversify our trade markets, especially in an environment where we're seeing, a rise in a protectionist stance from the likes of America.